In this video, we're going to catch up with the levels to watch if you're trading the Dow Jones, the Footsie and the DAX stock market indices. Hello, I'm David Jones. This is the weekly video I do with Capital.com where we catch up with what's going on with stock market indices. We'll take a look at the US, the Dow Jones, and then also have a look at the European indices, the big ones, the Footsie in the UK and the German DAX. Now, it's been a very different environment in recent months for stock markets. We had, particularly in the US, years of markets just gaining. Then we saw this massive burst of volatility late January, early February. And I think that has changed the tone of markets. We're going to take a look at that volatility in a bit more depth when it comes to the Dow. So let's have a look at the chart, the bigger picture, and some of the short-term levels to watch out for. Before we get into the short-term chart, let's just remind ourselves of the bigger picture for the US 30, the Dow Jones. Right here at the left, you can see that the spike the day after the presidential election, when many people thought with President Trump coming in, we're going to see markets sell off. We didn't. We had an overnight sell-off in the overnight out-of-hours market, and then up until January this year, markets just ground their way higher. We've had this massive burst of volatility during February. We saw markets sell off really heavily. And since then, we've seen markets volatile but not make much progress. And I think this could be the theme for a while. You know, we've had it for 3 months now. I think this sell-off really did spook people who'd got used to markets or the US stock market just grinding its way higher month after month. What I've done here, just to illustrate this, I've put some Bollinger Bands on. We'll talk more about Bollinger Bands in a later video, but they look at price volatility. And you can see during the rise how tight the Bollinger Bands were. And then just look how wide apart they got knocked after this fall. So the lower end of the Bollinger Band was 23,500. The upper end was about, nearly 27,500. So we had the Bollinger Bands 4,000 points away compared to, you know, back here when markets were really calm and just grinding their way higher, maybe 1,000 points apart. So you can see just the impact of this move, how it had been so long since we'd had that sort of move. Let's take a look at the short-term chart. This is the last 2 months for the Dow. What we're looking at here is an hourly candlestick. So each candle represents an hour's worth of trading. It's pretty volatile. You know, over the last 2 months, this goes back to the 27th of March over here. We've traded as low as about 23,400, being as high just earlier this week as 25,000. So we've seen something like a 1,600 point range over the last 2 months. So there's plenty of short-term volatility, but really not that much change. You know, we did see the markets gap higher earlier this week. So I think the immediate level to focus on, it may well have broken today already, but these lows back here from the 15th of May, around about 24,600. I think if we start to lose that, there's a risk we're going to see this market, you know, pull back into the previous range from the beginning of May. So I think there's lots of volatility day to day, which is clearly what short-term traders want. But just to look at the daily chart again, I think this continued scrappy, wide range sort of sideways trading could well be the order of the day for some time to come for US markets. So I think it's medium term, maybe we shouldn't expect too much change, but short term, still plenty of volatility. And the first level to watch is that 24,600 zone. If that breaks, I think there's a risk of a deeper sell-off. So for me, I think the risk is, in the weeks ahead, we'll just see this sort of chopped, wide sideways range for US markets, but very little overall direction. However, it is very different when it comes to the FTSE 100. We've recently seen, just this week, that market move out to fresh all-time highs, so bucking what's going on in the US. Let's catch up with the FTSE chart. Here's the FTSE 100. I often think this is a pretty dull market, but it's been anything but the case over the last 2 months. Look at this move. We had the lows down here from about 6,800. At the moment, it's trading near enough about 7,000, above 7,800. So we've seen 1,000 point plus move in the FTSE in a little over 2 months. The move here this is fresh all-time highs for the FTSE. So we've punched through the highs from earlier in this year. Compare that, of course, with the US markets, where they're nowhere near their all-time highs. So we have seen a really strong move by the FTSE. Clearly what's helped here is the weakness in the pound. The FTSE is always something of an odd one because so many of the FTSE 100 companies that make up that index, they derive their earnings from overseas. So if we see a weaker pound, it means when they come and book their profits back in pound sterling, it flatters that figure. So that does help traditionally lift the FTSE. We've got a clear uptrend here. You can see how the market has risen. Looking at the RSI down here, we've got a 14-day RSI. As usual, when we get an extreme move like this, it is not unusual to see these indicators go overbought pretty quickly. And that's been the case. If you'd been following the RSI, you'd have been selling out here 400 points lower than where the market is, and the market's carried on pushing higher. So in strong trending markets, we have to be careful about following things such as RSIs. Let's take a look at the shorter term chart to pick up some levels. So what we're looking at here, this is a 4-hour chart. So each candle represents 4 hours worth of trading. This is almost a textbook trend that we've had off these lows. Of course, it's always easy to look back in hindsight, but at the moment, that trend is still up. So for now, at least, any weakness in the FTSE still looks like a buying opportunity. I think it would take weakness, probably through these old lows. We've got the trend line coming in about 7,750 at the moment. So what, about just below where we're trading now. We're trading at 7,827 at the time of recording. So I think levels to watch if you do see a deeper sell-off. The trend line at 7,750, these old lows coming in at 7,700. So maybe this whole area from 7.6 to 700. If we lose that, then it starts to look like this trend is in trouble. But for now, it's done a great job of supporting the market over the last couple of months. So from a textbook point of view, we'd have to treat any sell-offs still as a buying opportunity, assuming that support zone is going to hold. So the weakness that we're seeing in sterling, definitely flattering the FTSE's performance. And just today, we've seen pound US dollar slip to fresh lows for 2018. So completely reversing the gains we'd seen earlier in the year. That's definitely helping the FTSE. So our last market, again, a little bit different. The German 30, the DAX, it's performing somewhere in between what's happening in the US and what's happening in the UK. So let's take a quick look at that. So here's the German 30, the DAX D30 in the platform. This is another one. Looking at the daily chart here, it has outperformed US markets. It's broken out this trading zone that we've been in. It hasn't done as well as the FTSE. We're not seeing it move out to fresh all-time highs. But as I said, it's the pound weakness that has flattered the FTSE's performance there. I think, we've got a clear trend in place since those late March lows. So let's take a look on the short-term chart just to pick up on that. So here's our DAX trend on the hourly chart, chugging along. I've picked it up here from the beginning of April. We've got trend line support coming in pretty much here, so about 12,950. We've had the lows over the past week or so ahead of 12,900. So I think this is the first level to watch. Again, assuming this trend is going to continue, we'd expect the buyers to start coming back in here. So I think for me, perhaps the key level are these lows from here. 8th of May coming in about 12,850, this sort of area. So I think from here up to where the trend line is maybe the zone to watch. But we've got a clear uptrend that's been in place. Not surprising. Again, the RSI has been bumping up against extremes on the hourlies. With the sell-off we've seen over the past few hours, we have seen the RSI dip back. But ideally we want to see some strength coming in, and maybe we see this market rotate round and have another look at 13,200. But like the FTSE, on the intraday chart and the daily chart, we've got a clear uptrend, I think, for now in the German market. So for the FTSE and the DAX, we have these definite uptrends. And of course, the classic charting mantra is we trade with the trend. However, these trends are still up for now. But I think if we do see continued chop in US markets, maybe we see US markets sell off over the next week, I really can't see the likes of the FTSE continuing to defy gravity. So for me, as ever, the important market to watch is the US, whether it's the Dow or the S&P 500, but plenty of volatility there day to day and week to week. We'll start wrapping things up there. I do run a live webinar every Wednesday lunchtime. It's free of charge, of course, where we look at these markets in real time. So to sign up to the next webinar, you can see the link in the down below in the description of this video. If you can't make it live, the recording gets made available normally a couple of hours after the webinar has happened. As usual, if you have any questions or comments or a different view on the indices, leave us a message in those comments down below. If you like the video, click on the thumbs up, and to never miss out on the videos we produce, we look at currency pairs, cryptocurrencies, trading strategies, technical analysis, all this stuff. Just make sure you're subscribed to the channel by clicking that button there, and you get notified every time we upload a new video. But for this week, from me, David Jones and Capital.com, we'll leave it there, and I hope you have a good trading week.